Hi everyone, this is Michael Bengiat with Lifetime Investor, and this is the Market Trend Advisory Weekend video for October 22nd, 2022. Before we start, here's our disclaimer. You can pause and read this. So on Friday, yesterday, we had finally a big up day on higher volume, and that's moved the market trend to back to a market and uptrend, and a confirmed uptrend. So we haven't seen this since I think it was August 26th, so almost 2 months. August 26th, we went into the uptrend uncertain, uptrend under pressure status, and then we went back into a correction. And then we had, let's see, let me go back over here. Yeah, we were in an uptrend for almost about 3 weeks before the market just rolled over. And since we're just starting out, we don't know how far this one's going to go. I suspect that it might actually go a little longer than most people think as a big fake out before rolling over. I still don't see this being the bottom. There's actually too many people calling it the bottom. They're all looking at the October bottom and saying, October tends to be the month where stocks bottom. And, it just seems like everyone's already expecting that. And whatever people expect, for the most part, it never doesn't happen in the stock market. So anyways, we are at least off to the races here. We'll see how far the race goes. It might be a short race or it could be a long race. We just don't know yet. So our market count now is 1 out of 5 with 30% exposure. So if you're following our investing strategy, you're going to be getting 30% long on the QQQ or the SPY on Monday morning at the open. And at this point, we have no institutional selling days and the power trend is off. So we're just kind of starting out here. Here's our stats for the investing strategies. We're currently still in market count 1x. That means we're using the unleveraged, just the QQQ or the SPY. You can see that over here. And we are still soundly beating the buy and hold for both of these ETFs. And I expect that we'll start seeing an improvement in these pretty quickly towards break even for the year if the market keeps up its rally. But that remains to be seen. So let's take a look at the NASDAQ. So you can see we had that huge reversal day. I think it was Wednesday or Thursday of last week. I don't have the dates on this to see exactly. So we had that massive reversal, and then we hit resistance at the 21-day moving average. That's this green line, and it's starting to turn around a little bit. And then the NASDAQ came roaring back, and we closed basically at the 21-day, slightly above it. So that's actually a good sign, since we haven't really been above it, closing above it since here back in September. So that's a pretty good sign. And we did have slightly higher volume. It wasn't anything with the NASDAQ where you go, yeah, that's really a great sign that institutions are coming back in. At this point, it's just kind of marginal. So that's not a great sign for the rally, but that's what it is. It can improve. Sometimes you do see this and then volume really come in for a few days afterwards. That's not unusual, but we don't have that yet. Now we go to the S&P. Now, the S&P is actually a little bit stronger. We had even it looks like a bigger reversal day. And then now we've pretty decisively closed above the 21-day. And we actually closed, looks like just above this day over here, which was Tuesday. Let me see, Tuesday. So that's actually a really good sign. So the indexes look like they are targeting now the 50-day. And the Dow, here's the chart of the Dow. The Dow actually came up and hit the 50-day and just kind of, that was resistance, couldn't get past it, but volume was actually pretty strong in the Dow too, compared to, going back a little bit here. So the markets are, you can see this huge 1,500 point reversal day that we had here. So the markets are just trying to discount all the news and inflation and everything else. And, I still think it's a little too soon. There's too many unknowns for the market to say, yeah, that's really it. I think this is really more of an oversold bounce going on off of, and there's a lot of short covering going on, especially on this day. It turned out to be that, once the buyers just came in, the shorts And it could be that they actually gapped down too on that day, and then we just came up and the shorts were covering their shorts, and then that just kind of snowballed into the current rally. But it's hard to tell. Nobody really knows exactly what goes on, but it's looking pretty good, pretty strong here. But as we've seen, we've gotten up to some of the key moving averages going back to April, and we've just ended up coming right back down. So, but I expect if this continues higher, it's going to aim for the 200-day, which is this black line coming down. Now, we also do have a lot of overhead resistance over here, because look at the angle of the 50-day. We just, that's a hurdle to overcome. If I go back to the S&P, yeah, I mean, the trend is still solidly down. We're just trying to establish some kind of a low. It may not be the bottom, but the market just decided this is a good place to sort of pause the selling and see if we can actually get some rally. Now we don't have. Oh, one more thing I wanted to say. We didn't get a lot of power on in terms of institutions coming back in, and also as I mentioned on the notes yesterday, it seemed like most of this rally came because. There's the Wall Street Journal ran an article about how the Fed was maybe getting a little worried about the pace of their interest hikes and maybe will try to cool it. But that kind of counteracts what the Fed's actually been saying. So I don't take a lot of that into account. Really I think this rally yesterday is really based more on hope than anything else instead of any concrete data. In terms of the technicals, we're just not seeing anything yet. We've had the highest number of stocks above the 200-day, at least since the 4th of this month, but still is really weak. 52-week lows are still swamping 52-week highs. And we have seen a little bit of change here on the up volume versus down volume. So we see we've had a number of days that have been pretty strong, but nothing yet. We'd love to see like a number of these days over 10, showing that 10-to-1 thrust to the upside. We haven't seen that yet. We saw one day, but then we were counteracted by a few days here that just kind of went back down, and but at least not to that 10-to-1. So, in fact, you can actually see over here. We had a huge up day, these two in a row, which looked like maybe that was the bottom, but then we just got a lot more down volume days than up volume days and kind of negated this. So, and in terms of sentiment, now sentiment is set up in terms of trying to find a bottom. It was pretty negative, which is of course positive on a contrarian basis. We were very bearish on the investors' intelligence numbers. They have actually a number of reports. I think one of them actually shows, investors are the most bearish going back to like 2008. I've seen other studies that, it's just off the charts in terms of bearishness. The CNN fear got down to panic and extreme fear. And the VIX got up to the low 30s. I think people were sort of waiting for a capitulation to come with the VIX would spike up to 40 or 50 and kind of call it, that's it for the bottom, but we never got that. And but the put call did have a few times spiking above 1 or 1.1. So all in all, yeah, the sentiment is kind of giving us that that sign of yes, this could be a bottom or a low. Of course, we don't know exactly what that's going to entail, but we were set up. So this rally, even if it continues on, I would say is actually pretty expected. I would not be surprised if it actually goes on a lot longer than people think, and that's going to be a big fake out because people are going to say that's it. The S&P is out of the bear market and it's just up and away, and you're going to see a lot of just people piling right back in, especially to the beaten down leaders, which are down, the former leaders, which are like PayPal and Square and Team and all those companies, and which are off it's anywhere from 50 to 80%, and they'll be piling right back into that, and it's there's just no sign that what's caused the bear market in terms of rapid interest rate rise, inflation, and everything else, and the dollar just continuing higher and higher. there's no sign that that's just going to be wrapped up in a month or so. Remember, this only started less than a year ago. So, and that's this kind of bear market and this kind of a change, especially in the bond market after so many decades of different direction. Now we've switched direction in the trend. It doesn't just wrap up in a little while. So I wanted to show one final chart here. This is of the 20-year Treasury bond. Now, this may be something that the market was kind of going off of too. You can see we've been in an extended decline. Just kind of a tepid rally here, and then we just came down. And then on Friday, we actually just gapped down, and we had a sort of call it a capitulation day. We haven't seen this before. Sure, we had days where it came down, but we didn't really gap down here, though we did have high volume, and we came up. Here we actually, looks like this was the highest volume, I think. Now actually over here is the highest volume. But it could be a little bit of a capitulation. Interest rates really had just been shooting up just nonstop. And so this could have been what it's, in other words, that was it. A lot of the shorts just started getting out. And so we might see just what the market's been looking for. It wants to see a reversal of the short-term yields and have it send back down and price go back up. And so we'll see what happens there. But this could have been a catalyst for part of the run. And for this to actually start running back up would not be surprising either. So all in all, we're not off to the races, but we're leaving the starting gate as of Monday, and we'll see how long it goes. I mean, it could go for a while. It could just peter out right away. What we don't want to see is distribution or institutional selling days come right into the market, soon after the follow-through day. That's just been a death knell for the market when that happens. So, well, that's it for this week. We really don't have, it's just kind of a wait and see now. If we may get a tradable rally or may peter out, we'll see. The final thing I wanted to say, let me go back to our summary report. We still have the individual stocks and non-index ETFs action signal at no exposure. And the reason for that is that most stocks are just not acting very well, and there's very few stocks that are really set up. Normally, you want to see a lot of stocks just kind of forming, various bases. There's a famous bottom where there were tons of cups and handles. I think it might have been 08 or 09. And the market just was ugly and the news was terrible. And yet at the same time, there were a whole bunch of stocks setting up, especially growth stocks, which is what we always want to see leading the market. And at this point, though, and they all ended up breaking out and doing very, very well. At this point, there's hardly anything, holding up, breaking out. There's not a lot of bases, and the ones that are kind of setting up are mostly defensive names. You can see Hershey and Johnson & Johnson and names like that. They're actually doing pretty well. Not a lot of growth names. The biotech sector had been doing pretty well, but it seems to have kind of been pulling back again. There's just no leadership, and there's really no merchandise. And we in our stock pick service, we talk about this a lot. So we've just been watching a number of names. Now, some of the ones we've been watching have actually done pretty well, have broken out, and so far have held. But a lot of them all year long, they break out, and within a few days, they tend to fail and pull back to their bases. And a lot of cases just break down, and that's the end of that stock for a long time. So we are seeing a little bit more stocks holding up, but nothing to the point where we're seeing anything to be able to change our trend market and trend environment in that service to anything but red. But we hope that changes, and if it does, that will be a great sign. It's another pillar of the market. At this point, we just have the first inkling that we may be onto something. This could be the bottom. Nobody really knows. But we need to see the other pillars line up in terms of stocks setting up and institutions coming back in the market before we really can get bullish and more heavily invested. Okay, that's it for this week. I will talk to you guys next weekend. Okay, thanks a lot.